Alright, I come back to LIFO method or last in first out method. Guys, last in first out, it means that, come back here. Are you? Yes, okay. So what is last in first out? It means that whatever you put last, this 6 unit, 12 unit, 18 units, whatever you put last is the first to be out for production. So whatever left in the kitchen will be the one that you put earlier. The 9 that remaining on the shelf is what you put earlier. So you see how they calculate last in first out? Simply by the 9 remaining on the shelf times 1 ringgit and 5 cent, the first price of the month. Because definitely when you use LIFO, it means that whatever is remaining is the old one. In first out, whatever remaining is the latest one you put. But LIFO method, whatever is remaining is the first one that you put, because last in first out. So you just multiply 9 to 1 ringgit and 5 cent. So your value of 9 cans is 9 ringgit and 45 cent. Guys, as you can see, using these 4 methods, we will get different price or different value. If you use LIFO, the value of 9 cans is 9 ringgit 45. If you use latest purchase price, then your value of 9 cans is 12 ringgit 60. If you use weighted average purchase price, then the value of 9 cans is 11.50. And then if you use the FIFO method, your 9 cans is 12 ringgit 30. So using different methods of valuing the inventory, you will find different value in your records. Guys, I just would like to I just would like to explain why they have this different method. Usually they have the reason why different restaurant using different methods in calculating the value of inventory. Guys, first in first out, this one is the method that is very applicable and logical. You should not first in first out means whatever food that you put first, you will use first. Whatever food that comes first to the storage, you will use first. Why? Because you don't want the food to be spoiled. If you just simply use whatever you put in the store, you don't use the rotation of stock, which is FIFO, first in first out, the items that you put first and you don't use will spoil and expired. So it is very logical that people use first in first out method, in which those who are put first in the store, those which are put first in the store, you will use first. So that is the very logical method of valuing the inventory. Weighted average purchase price, this one you don't want to actually calculate one by one. You are not doing the proper rotation and so on, so you don't know the price. You don't put date and so on. If you don't put date and price, you don't know this one is when and this one is when do you put in the storage. So the way that we can calculate the value is we get the average price. We add up all the value of purchases and then we divide by number of cans, so you get the average. Because you don't know, you don't put dates, you don't put price on the cans, you don't know which one to use first. You don't use FIFO method, so that's why you use the average purchase price method. Latest purchase price method, why certain restaurant they use this method? Because latest purchase price is the current price. If you are to sell back, I give you the extreme example. If you were to sell back all the cans, what is the latest purchase price or latest value? The latest value is 1 ringgit 40. So that is the most logical to them, because even though they buy from different dates, but this is the current value. Why don't you use the current value? So they have also their logic for using this method. And last one, this one seems not logical. How can someone use LIFO method? What is LIFO? Last in, the last cans in will be the first you use. So the first that go in, they will be remaining and spoil. Am I right? So this method seems not logical. But LIFO method is used by many restaurants also to actually give some impact to the accounts book. Why? I tell you, guys. As you can see from the table just now, from the table here, how do you see is the price of the inventory, of price of the stock? The price keep increasing or decreasing? The price keep increasing. As you can see, the price keep increasing. Guys, LIFO method, when they use here, when they use the last one put in, what does it mean? The cost is higher. Am I right? You understand me? When you use all this first, it means that whatever go to your kitchen is the expensive one. So what happened to your cost? Your cost will be high in your accounts record. In your book, in your accounts, your cost of food is higher. What happens if the food cost is higher? When the food cost is higher, the profit will be lower. That is accounting. When you increase cost, you will get lesser profit. When you get lesser profit, you pay less tax to the government. And that is why people use LIFO. They want to increase the cost in records so that they can have lesser profit. So the lesser profit will be less tax, so they will pay less tax for the business. So that's why sometimes certain restaurants they prefer to use LIFO method. So LIFO method can help you in your accounting records and also payment of tax to the government. So guys, I'm not sure whether I should continue the rest of the chapters. All right. I will skip first this slide. I'm not going into this slide because this one you have learned how to calculate cost percent, how to calculate food cost percent. Yeah, food cost percent and cost percent is the same calculation formula. And how to calculate total inventory, average inventory, inventory turnover. Guys, this one I don't plan to discuss with you because this one is not in the exam. I go straight to techniques for determining cost of employee meals. Guys, I will prepare another video for this. Let's see you in the next video.